Greetings and salutations. Thank you for lending an ear to the voice of the times this Monday, March 7, 2022. For today's editorial, Oil Price Stabilization Fund failed. Better options exist. People are clamoring for solutions to skyrocketing fuel prices, but the authorities should resist inferior options, particularly the revival of the Oil Price Stabilization Fund, or OPSF. Recently, President Rodrigo Duterte ordered a review of the fund, which in effect will scrap oil deregulation. Reviving the OPSF is a terrible idea because it would keep pump prices high when world oil prices fall. This is the other side of the coin, so to speak, of the argument that the fund would subsidize fuel rates when pump prices rise. People forget that the OPSF failed because the market will always be a more efficient determinant of prices. Certainly, something has to be done about the steep increases in pump prices. Some suggest suspending the excise tax on fuel, which is another bad idea because of poor targeting. To put it bluntly, why should the wealthy who buy relatively more fuel than other consumers enjoy a subsidy? The government already has a mechanism for this situation, which is a fuel subsidy for drivers of public utility vehicles. That too has targeting flaws, but it is better than suspending the excise tax, which is needed to raise funds for the government's economic recovery programs. Besides, the OPSF or any large pool of public funds creates opportunities for graft. Of course, politicians and bureaucrats might offer banal statements about good governance and accountability, but their record makes people suspicious of their ability to manage public funds better than the market. Better options. Critics of the oil deregulation law point out that fuel prices continued to climb despite its enactment. True, although the fault lies not with deregulation, but with the world's insatiable demand for fossil fuels. With that, reducing demand and oil dependency seem more sensible. In the near term, the government should mandate increasing the proportions of ethanol and biodiesel in the fuel blends sold at local gas stations. Some Latin American countries, for example, use as much as 25% ethanol and 10% biodiesel. The Philippines requires only 10% ethanol for gasoline and 2% biodiesel for diesel. Also, the Philippines, perhaps together with the Association of Southeast Asian Nations, should ask oil-producing countries to release more barrels into the global market. Increasing supply will help bring costs down worldwide. That is why US President Joseph Biden ordered the release of some of America's strategic oil reserves, as much as 60 million barrels. Of course, the main beneficiaries are likely to be American consumers, and the relief will be temporary. To help the rest of the world, US oil firms should also ramp up production to make up for the shortage caused by the invasion of the Ukraine and international sanctions on Russia. That brings us to the long-term options. Just like the US, the Philippines should build up its strategic oil reserves. But before that, there should be better mechanisms preventing pilferage and wastage. And to minimize inventory costs, the reserves should be increased only when global prices dip. Additionally, lawmakers should pass hefty tax incentives for those buying hybrid and fully electric vehicles. That would lower demand for oil. The more people switching to automobiles that consume less petroleum, the better. And the larger the incentive, the quicker the transition. Lastly, the government should generously fund research and development on alternative fuels. For instance, there are ongoing studies of algae as a source of biofuels. If these are successful, consumers could have a substitute for petroleum and, as a bonus, transform a waste product into something valuable. Of course, some might point out that the Philippines also has abundant sources of coconut oil, perhaps even fuel alternatives made from sugar and corn. Those are good too. But policymakers should avoid jacking up food costs just to lower pump prices. In other words, there are better ways of helping farmers without hurting consumers. If given more time and space, perhaps other alternatives might come to mind. Discussing the suggestions mentioned here seems more productive than entertaining bad ideas, particularly the revival of the OPSF and the abrogation of oil deregulation. And that's the editorial for Monday, March 7, 2022. For more news and information, get a copy of the Manila Times on print, subscribe to our digital edition, or log on to www.manilatimes.net. Follow us on Twitter, Facebook, and Instagram, and listen to The Voice of the Times.